What's up, everyone? Dan here, Crypto Capital Venture, January 4th, 2019. Inverse head and shoulders. What is it? If you've been watching technical analysis the last couple weeks, I'm sure you've heard of it. Many analysts talking about it. We're going to talk about not only what is an inverse head and shoulders, what makes up a inverse head and shoulders, but is there some caution that is lying within the current inverse head and shoulder formation that might be in play, right? We haven't gotten confirmation yet. So let's jump in and talk about this. So first, I do want to start this by saying we've talked a lot about this 50 EMA, especially in context to this last bear market that we had a few years ago. That initial bottom, pull back to the 50 EMA and then rejection, right? And then we had this consolidation around it for like 5 or 6 months. It's very healthy to anticipate something similar. But I want to throw out there, in terms of this inverse head and shoulders that we're going to talk about, the breakout potential, if we do confirm it, is pretty strong. It's pretty high. But I want to throw this out there that we had a potential inverse head and shoulders that many were talking about, a very large inverse head and shoulders that was anticipated to be the reversal into this bull market that everybody wants. And you can see it on the screen. We have this left shoulder, we have a head, and we have this right shoulder, and failed confirmation with this rejection at the 200 EMA on the daily chart. So now we have this smaller formation, which you see here, inverse head and shoulders possibly in play with this right shoulder kind of in formation approaching the neckline. So what is an inverse head and shoulders? Very simple. Inverse head and shoulders is a bottom indicator in terms of the momentum shift of Bitcoin. So number one, you have a swing low, which you see on the screen, which basically kind of forms the first initial slowing down of downward momentum, right? And this is that break below 6,000 that everybody remembers. We have that first swing low, that first bottom. Then we have a mini rally. So this rally here is around 28 to 30% right there. Off of that rally, which really is the formation of the neckline in the long run, we have a lower swing low, right? And at this point, this formation could begin looking like a falling wedge, right? This could also be a bullish formation. However, this is the formation of the head in this scenario. So this lower swing low is the formation of a head. Then we have another rally, step 4 of a head and shoulders. And you're starting to see the formation of a potential bottom in this market. So rally, step 4, back to the neckline, right? And then from that rally, another low. However, this next low is a higher swing low. So it's a higher low. So we have a low, a lower low, and then a higher low. And that is the final step in the process. Now, the confirmation step in the process would be for Bitcoin to break and trade above the neckline. Now, I mentioned that there might be some caution found within the current formation. And that's basically because the neckline of this inverse head and shoulders is a downward sloping neckline. So many analysts believe, and it's kind of based on what has happened in past and in these formations, that a downward sloping neckline in an inverse head and shoulders basically has a breakdown 70% of the time. So basically failure 70% of the time, meaning potentially new lows 70% of the time, 60 to 70% of the time. So the odds are against us for a confirmation of this inverse head and shoulders. And especially in this bear market of continued rejection at this 50 EMA, it's something to be very aware of. The other thing that plays into the weakness of this inverse head and shoulders is the decreasing volume in this right shoulder. So you see in the formation of this right shoulder here, there's a decreasing in volume. If you look at the volume right here, that's indicative of a weak inverse head and shoulders, weak volume, weak momentum that we need to have a break above. Obviously, it's Bitcoin, and we're in a very volatile environment, and anything can happen. So we could get a break above. In my opinion, if we do get a break above the neckline and a confirmation of this inverse and head and shoulders, I believe it will be a strong one. And that's what we've been talking about on this channel. The basic targets for a break would be this 200 EMA area up here, which we haven't seen for quite some time, right around $5,700. So it could be a really strong move for Bitcoin if we get a break above. However, it's definitely something to be cautious of right now and to watch closely. Another thing that I want to show you on the RSI in terms of the daily chart for Bitcoin is this similar type of move of indecisiveness and consolidation that Bitcoin had right around the $6,000 level for a while before making a breakdown. We have a similar move of indecisiveness now. So playing into the whole story of this possible weak inverse head and shoulders in formation, I would take caution, be ready for anything, be ready for a new lower low, which we have our target on the downside that we've been talking about on this channel, which is down here, in the $2,500 to $2,800 area. So find your risk tolerance, make your decision, but be prepared either way. It's going to be a fun, probably next week or so, to see which way we break. But let me know your thoughts in the comments below. I want to know your thoughts on this inverse head and shoulders in the market in general. If you're not a subscriber, subscribe. I would love to have you as part of the channel. Always trying to get better at this thing called YouTube, but I appreciate each and every one of you. I will see you all in the next video. Have an awesome day, and God bless.